Ladies and gentlemen, as a masterclass, this can be slightly more interoperative. So if you want to ask questions as we go along, that's fine. Quite happy to take them. There's also a little bit more of a dialogue and discussion intended. So I'll try not to bore you to death with lots of slides. Particularly as this session was going to be 35 minutes and then got changed back to being an hour about 2 hours ago. So I'm David Worthington from Bell ID. I'll give you a little bit of information about the company, and then we're going to talk about building on the mobile payments opportunity. In terms of Bell ID, we are a product and solutions company with over 28 years experience coming from finance, so EMV, chip and PIN and related applications. Identity, there's a number of reference sites we have, including here in the Gulf for national ID or e-passport schemes. And for the last few years, moving more and more into the mobile space, putting payment applications, ID applications, and a host of other secure applications onto mobile products. When I say mobile products, clearly that includes the mobile phone, but increasingly that also includes all sorts of tablets, such as iPads, etc., which in many ways are beginning to take over from the more traditional view of people going to a PC and learning to do things with a PC. We have a number of good customers within the Gulf for our EMV solutions, some of which are here today. And that covers all sorts of things that basically works around token management. So managing a chip, putting applications onto it, managing the keys, the certificates and the life cycles of these things and the relationship to an end phone holder, card holder, account, etc. In that space, clearly our customers are the banks, retailers in some areas in terms of what you might call private label payment cards, increasingly popular within the region, but certainly very popular in places like North America and parts of Europe. Payment card issuers outside of the banks, monolines, etc., and also many of the service providers that provide solutions for card management, card issuance to the banks, so your card bureaus and some of your payment processors. Identity, as I've said, government, but also enterprise or corporates that have ID schemes. Universities, we have a number of good reference sites, and indeed one of those will be talking tomorrow, I believe, in one of the ID slots, and also healthcare, so health cards, which I know are very prevalent within the region. For managing mobile, the core focus of the rest of this discussion, mobile network operators have a need to manage what's on their SIMs, but also there are trusted service managers, third parties that are helping to load service providers' applications onto mobile network operators' SIMs or handsets. And particularly in the mobile payments theme, there are indeed financial institutions that would then still issue a mobile payment card rather than a physical payment card, or in conjunction a complementary, a companion application for mobile as well as what they've got on the plastic. So, talking about the mobile payments opportunity before we look beyond it, are we really talking about taking a contactless payment card, something that's already emerging in a number of the GCC countries, and just putting it onto an NFC mobile phone, a phone that has the capability to act like a contactless reader or card? Actually, it's a lot wider than that in every way, shape and form. So any mobile device, as I've said, and here one of the things that's quite important to look at both in the developed and the emerging markets is we've already started to reach new generations who, coming through, may never, except possibly in school or university, interact with a PC. Their primary interaction is in terms of any form of internet access through a mobile phone or tablet. In some of the emerging markets, they're not going to go looking for an internet cafe to get on a computer. They're going to do things on a mobile device that they've already got. as their standard point of contact for any form of getting into secure payment capability. NFC payments, so PayWave, PayPass, DPass for diners, Amex, China Union Pay, all have their own contactless solutions that work on a mobile NFC contactless phone. Is an interesting extension of the payments area, but isn't the biggest focus for mobile payments. Some of the earlier presentations were discussing in terms of some of these areas. Remote mobile internet payments, or m-commerce, so using your iPad, using your mobile phone to buy anything, whether that's a ticket from a transit operator, whether that's something from a store, a book, whether it's a ringtone, whether it's prepaid value to put into your mobile to be able to make more calls. All of those would be a remote mobile internet payment. And then again, from one of the earlier presentations this morning, in terms of mobile money transfers or person-to-person transactions, which might well be something like PayPal, and combining some of the technologies, PayPal Bump, where you touch two NFC phones together to be able to identify where the actual transaction is going to go, through to some of the more rudimentary ones where you have to actually put in people's telephone numbers or account numbers to do a transfer to another person, either domestically or in another country. And we'll talk a little bit around that. It's of key interest to both the established, so this is people like Visa, Mastercard, Amex, etc., and of course the banks, and emerging players in this space. So in some markets where regulation allows, you'll have mobile network operators who are trying to do various schemes, e-purses, etc., where you can actually pay and it be included on your monthly bill for your phone. So it's not a call, it's an actual payment transaction, but it's still billed to you in with your calls. And a number of other third-party players, Boco in the United States, etc., who have seen this as a technology leap and an opportunity to come in and perhaps grab some space where Visa and Mastercard was seen not to be moving fast enough. Although certainly in the last few months, there's been a lot of Visa and Mastercard announcements around mobile, which will have shown that they are paying a lot of attention in this area. So it is definitely something that's happening. To go back to a definition, just to include one, as I said, it's somewhere where there's some form of transfer of funds in return for goods, service, or possibly paying another person in terms of your share of the meal or the coffee bill. Goods could be digital, easily delivered over the iPad or the mobile phone. They could be tickets, transit tickets, video clips, rights of some form into some service, or they could be physical in terms of Amazon for books, grocery items, clothing, jewellery, whatever it may be that you're looking to buy. We've mentioned money remittance, sending money from one person to another. And as I say, the key thing here is, although mobile phones themselves are, in some markets, the main driver, particularly in the emerging markets, the fact that the technology between PC and mobile is continuing to merge. A mobile device is basically the computer in your pocket. Depending on how big your mobile device is, it might be a big inside pocket, or it might be the sleeve that you carry your iPad around. One of the interesting things there is in some markets where mobile communication is quite expensive for data, that these things are more and more leaning to being not only supporting wireless connectivity, so Wi-Fi, some of them are even being shipped as Wi-Fi only with no 3G or 4G connection as part of the package. So again, just because we talk about mobile doesn't mean it has to go over a 3G or 4G network. We've discussed e-commerce very much becoming m-commerce. We've discussed in terms of personal payments between two people and proximity payments, where basically in a retailer, instead of plugging a card in or swiping to pay, I am tap and pay or wave and pay. That might not just be a merchant, it could be a service provider in terms of opening a gate to get access to something, possibly transit, and indeed in the Emirates already you've seen from the last 12 months the introduction of mobile NFC phones that can actually get you onto the connecting services in Dubai. So, it's technology, it's phones. Why is it really interesting? Well, the real reason it's interesting is we've talked about mobile being a key driver in payments and finance probably for the last 14 to 15 years. What's happened in the past was the technology wasn't there. So at one stage there were discussions of using Bluetooth for doing payments. It's far too slow, requires far too much of an overhead to actually identify third parties. SMS-based payment systems have existed and been developed in some areas, but more recently it's this technology merging of a mobile phone effectively becoming a PC in your pocket and technologies such as NFC that bridge into the same space that a number of contactless card payment products have been in already. And that's led in the last 18 months to increasing value judgments by all of the forecasters and the analysts to say this is really happening and it's a big market. So Juniper Research quite early on was quite conservative in terms of estimating that this was going to be worth something in the region of $670 billion as a world industry. Sometime later the Yankee Group made theirs, getting close to $1 trillion over a 5-year forecast initially, and indeed Javelin and a number of other players have in the last 6 to 9 months come up with much larger figures that shows that people are becoming more and more confident to make forecasts that says mobile payments are a key growth area. Now, as we've said, because mobile payments covers a large number of different things, it's safe to say that if NFC's growth isn't particularly big, mobile commerce growth could be, and in some markets, mobile money transfers or person-to-person payments could be the area that's driving that regional growth. From a general overview of the forecasts, if you look back 12 months ago, the view was that NFC proximity payments was somewhere between 7.5% to 10% of that growth. There was a much bigger focus in terms of money transfers, particularly from the emerging markets, and almost as large in terms of mobile commerce. Well, certainly we've seen all of those areas continue to grow, but given the interest and investment that Mastercard, Visa and a number of other existing, established and some new players have put into NFC proximity payments, that 10% is starting to grow as a larger tranche of a much bigger pie. So, how do we build on mobile payments? Well, we know payments are necessary. Using chip technology, appropriate keys, certificates, we can make these secure payments. And secure payments are essential for pretty much all of the requirements in terms of proximity payments for retail, transit, m-commerce payments to any merchant. They want to receive their money, they want it to be guaranteed. They're not interested in the overheads of having to pay large, effectively insurance premiums on payments for a scheme to guarantee when there's counterfeit in the system. And even person to person, people want to know that they're getting paid, either they pay the right person, or when they receive the funds, these are real funds and they can then go and convert them into cash, into a bank account, or pay them on to somebody else. I was in Kenya a few months ago talking to a professor there who'd just sent his father some money, except for he realised shortly afterwards, in talking to his father hadn't received anything. He looked back into his mobile phone records and found the number he typed in was 1 digit wrong. Now with M-Pesa, he'd initiated the transaction, it was a valid transaction, The number existed, so the funds had been sent. The issue was, under M-Pesa rules, that was it. So this $100 this professor thought he'd sent to his father had gone to somebody else out there who was very happy to be $100 wealthier, not interested in receiving any more calls saying, can you please send it back? And there was no third-party way to go and say to M-Pesa, I sent it to the wrong person. Yes, it was my fault, but secure payments have to have other things around them. Now, M-Pesa has certainly improved in terms of, with some of the newer phones, you're now actually using your address book to choose the numbers. So if you put the number in right in the first place, you should be able to send to people a number of times and make sure that it's the same. But there isn't anything built into the scheme that says, if you make a mistake, or if somebody gives you the wrong phone number and says, oh no, but I've still not got the money, so you're not getting your goods, that the system doesn't have guarantees around it. If you build in some chip technology and some other things which, with NFC and remote payments based on secure elements, chip technology, this can be avoided. You can have unique identification. So security of payments is essential for people to trust it and to use it and to continue to use it. But at the end of the day, payment is usually just a facilitator to do something else. When I did a transaction on Amazon, it was because I wanted to get a book. I have to pay for it, but the reason I went to Amazon wasn't to make a payment, it was to get a book. In going on to the train line website to buy a ticket, the ability to actually be able to go onto a train and travel is what I want. Again, I have to pay for it. It has to be secure, so the train line can then pay any of the train services operators that are doing things. But the key thing is the service or the good. Paying is just facilitating me easily doing this without having to physically turn up with cash in hand. So building on mobile payment, one of the key things for anybody either coming from the financial space to enable the payment or from the mobile network operator space to enable mobile related activities, or some service provider sat in the middle, is trying to marry together the right bucket of services in terms of being able to pay, possibly being able to pay with prepaid, debit, credit, possibly being able to pay related to account transfers, and then being able to get to enough content providers, service providers, to get transit tickets, goods and services from m-commerce retailers, to be able to buy ringtones, whatever it may be that they want. It might be, in doing that, that you then start to bundle that up into a wider service. So in the last week, there's been a lot of announcements around the Mastercard PayPass wallet. So what Mastercard is looking to do is say, well, PayPass is about payment, and I'm enabling things, but with PayPass, a very small part of this is, yes, in a mobile NFC phone, I have a device that I can now wave instead of a card and do a low-value transaction. Great. As long as I don't have to pay for the phone, it's cheaper than me paying for the plastic. But I want to do more than that. I want to give the user interface on the phone for people to do secure remote payments. So they're using PayPass to go in and go to Amazon, etc., and buy books and other services. And it's all part of the bundle of services that I'm doing. I want to go a step beyond that, partly in addressing the previous presentation, by saying I want to make it easier for them to pay. So I'm facilitating payment to do whatever it is they want to do. If it's a remote payment, the last thing I want somebody to do, particularly on one of these very large keyboards or on one of these touchscreen ones, which are also very nice to use but terribly bad for doing all the numbers, is say, can you, every time you do a transaction, enter a 16-digit number, enter an expiry date, now type in your address, now confirm that the delivery address is the same as your billing address. So PayPass Wallet, as an example from Mastercard, has said, I will now build in, based on the secure credentials of what I can put on the chip in the phone, that you can save all of those details, and when you go to a merchant who has signed up to PayPass Wallet, with one touch of the button, I can do the equivalent of an EMV transaction using the chip in the phone, but I can also at the back end hook that up and fill in all of the form for you with your name, your billing address, all of the card details. The merchant has a transaction which can effectively be seen as being card present. It's EMV over the mobile rather than card not present. And instead of it taking 38 seconds or 2 minutes to fill in the details, it can be done momentarily. You enter it once, it's stored by your bank, and then can be used for any retailer that's going to use it. Again, this is just enabling, facilitating that payment becomes easier so you make more of them. And most of the things, again, the rationale behind the mobile was, how can I do things quicker, easier, when I'm on the move, when it suits me, rather than having to go to a bank or go to somewhere where there's a computer or go where there's a payphone. Transit is seen in most regions, although it varies from country to country depending on what transit systems there are, as being one of the killer applications after payment. And again, you need payment to make transit. There are initiatives by Visa and by Mastercard to say, in some environments, I could wave my phone in and tap out, and all you need is my Visa number, my Mastercard number, to be billed at the end of the travel for whatever I've done. So this is being implemented in London by Transport for London for the Olympics this year. The issue with this is that in doing that, there are lots and lots of transit tickets where you might have discounts, you might have benefits, you might have concessionary travel, you might have a periodic ticket, so a monthly ticket or an annual ticket, and those don't really fit so well with the Mastercard and the Visa model. Equally, doing this as a post-process in the back office means, for those of you in the banking and the retail industry, you come very, very much up against the payment PCI issues of holding card data, retaining card data, and making sure it's not abused. So for many systems, particularly where there are ferries and other things where that might need to be an offline payment or a very fast payment, the issue is that yes, they're quite happy for you to use a credit, debit or prepaid card to buy a ticket, but they'd also like people who are going to pay in cash, coins, other vouchers, any other form of payment that they might be able to make from an account, to also be able to have tickets, for those tickets to be as fast as possible and to cover all of these different scenarios. So in many respects, you might see in the wallet on your phone a payment card, but you might also see on there an application from a transit provider that says, please use your payment card from your phone to buy your ticket, which I'll store in here, and when you tap in and tap out on the subway, it's actually a ticket transaction. The payment's been done in advance to pay for it, or in some instances, after you've done a period of transactions, you'll be billed by the transit operator using other systems. Ticketing takes that a little bit further, because the ticket could be, instead of for transit, it could be a Grand Prix, it could be the Olympics, an event at a stadium, it could be any form of entertainment or access rights. As an e-ticket, it could be an entitlement to pretty much anything. Or as an e-voucher, it could even be a free cup of coffee for coming to Cars Middle East. Again, there may be certain rights and reasons that somebody wants to promote and give you these things that mean it's much easier to have an application that does this, possibly connected to loyalty, rather than say you waive your Mastercard or Visa, assuming you're eligible for a card payment product at the time of transaction. We've discussed in terms of secure identification the Mastercard PayPass wallet. There are other initiatives, Visa's wallet and a number of other providers who are looking particularly at the prepaid space to say, I want you to have a credential in your phone that gives you access to other things. And certainly there's a number of initiatives such as the NIST initiative in the US where they're looking to have secure credentials which can then be used for access into registering for a driving license and government services. So this isn't, I'm going to pay for it. This is because I have a relationship with somebody that can be used as a trust, a registration. I can now use that to get access into other services. Whether the banks wish to be used as registration authorities for government services is another discussion entirely. Loyalty, from a retailer point of view, they're looking for something that actually promotes more purchases or additional purchases as part of an activity. In the past, in terms of vouchers, paper vouchers, etc., and some other promotions, they've always had the issue that these tend to be cast a very wide net and then see what happens. And as soon as you've issued some vouchers or you've put up some posters for a campaign, that's the campaign you've got for as long as the date on the vouchers, and the other store next to you can then copy it and give a slightly better discount or a slightly better offer straight away. Moving that into the mobile world, we've seen very much from Google's, but a number of other providers, that the ability to change offers on a daily basis, on an hourly basis, so lunchtime is a different offer than breakfast time for coffee, on a not only retailer basis, but on a personal basis based on preferences. So really getting into the depths of a marketing database to know your customer and offer something to them that they want. And with geolocation built into the phone, possibly tell them where the nearest place is that they can go and get their Kudo sandwich, their Starbucks coffee, etc. You can have a much, much greater return on your investment in that marketing. So if you look at Google, one of the real reasons they got into this is primarily profitability. The amount of money they're paid for you clicking on the website, Google, find me a restaurant, choosing that restaurant, is a very small amount. If you go in and present an offer and actually buy food in that restaurant and they can identify that it was Google who brought you in there, the return to Google is in the region of 10 to 50 times more. Now, 1 cent to 50 cents is a much, much bigger return and is worth the investment of trying to get into the wallet. So again, there's lots of things there that say, well, and at the end of my meal, I might wave and pay with my phone. I might get out my wallet and pay with some cash. It doesn't matter from the point of view of Google and the retailer. You've come to them, you might have found them using a map on your phone. The offer that you've got might be purely because you've registered a loyalty scheme. The mobile has caused some changes in your behaviour. One of the other ones that we're seeing as well at the moment from a number of suppliers is the idea of NFC postering. So I have a poster, I have some offer or some information related to the latest film. You tap your phone against it to say, yes, I'm interested in this. Or in a merchant, you tap your phone against the poster to say, I'd like this 10% discount for olives. And it will then say, right, I've got your details now, I've registered you for this. I'll send you a URL to your phone for you to find out where you can get it. And when you present payment at the terminal, you tap and you get your discount. Again, the merchant is changing your behaviour and is quite happy that this advertising is producing a result. So in building on mobile payments, which are only there to facilitate all of these other things, whether you're providing the wallet, whether you're providing services to the phone that relate to how I get to the store, etc., you need to be able to package that offering to say, it's not just payment, it's not just a ticket, it's how do these things interact. A prime example at the moment, in the UK there is the ITSO transit specification. So this is smart card ticketing. I can get a ticket, I can download it onto a smart card, it's a contactless ticket, I can wave to get access into a number of services on trains, on buses. At the moment, I can go onto a website, I can use my card, fill in all my details, and I can buy a ticket from them. But when I then go to the station, I have to put that credit card in and they print me a paper ticket. I can't get it loaded onto a contactless transit card. Recent initiatives have seen that actually the one thing, payment to a paper ticket, and the other thing being we want to get to contactless transit cards, means I have to bridge that. So if I'm already going to a website, possibly from my mobile phone, one of the options I have to offer at the end of it is, do you want to go to a station and print a ticket? Well, I'm not going to be able to put my phone into the reader anyway in the station to get the ticket printed. Or do I want to download that ticket straight onto my phone? Now, if you take that from trains to aeroplanes and a number of other people that are initiating this, if you can actually, as somebody's driving you to the airport, as in most countries, trying to use your phone while you're driving is still illegal, you can order your ticket and have your ticket delivered to your phone. At the moment, it might be a 3D barcode or a reference number. In future, NFC phones, it could literally be something that you walk in, you scan it, and then all your details are there. Wave and travel. It's that marrying the propositions together to say somebody's providing transit and tickets, somebody's enabling payment, and a mobile phone is the consumer's device for being able to bring all of these things together. Now, this might be through partnerships, it might be through service providers trying to bundle these things together in the wallet, it might be through people actually offering a group of services and branding them as their own. Certainly some of the Google initiatives are very much, it's Google you're dealing with. What Bell ID seeks to do as a product and solutions company is provide the enabling solutions for whether you're a bank wishing to offer loyalty in other areas, a mobile network operator wishing to talk to banks to add in their payment facilities into your wallet, or indeed a third-party wallet provider such as ISIS in the US, etc., who are looking to load in everybody's stuff to their wallet and own the customer relationship, but they don't want to be a payments processor, they don't want to be a transit operator, they just want to own a relationship with the customer and facilitate that, and then take a little bit of margin off everybody in the process. It's all about managing those relationships and being able to deliver securely a payment, chip-based, a transit ticket, securely into some kind of mobile NFC device. From our mobile token manager, whether it's a EMV payment card, whether it's a MyFair transit card, there's going to be key management, there's going to be preparation of data, there's going to be loading that over the air onto the phone, but in the end it is just another application being loaded onto a chip. The fact that it goes through 3G or Wi-Fi is irrelevant in many respects. There are some standards there that cover that. So it could be any credential that you could do that with. The advantage that the mobile phone brings to us who've been around for 20 odd years in smart cards is this is really the true multi-application event. If you had a piece of plastic in the old days, there was an unwritten rule that if you had a Mastercard brand and a Visa brand and tried to stick it on the same piece of plastic, lightning would strike and it would melt. The rule said it couldn't happen. On a mobile phone I own, I can have any card I want in the wallet. So I could have SPAN, I could have Visa, I could have Mastercard, I could have Amex, and just choose between them. And there's nothing in the rules that prevent that. In fact, in trying to facilitate payments, if you look at the Mastercard PayPass wallet, they actively state that as well as PayPass, of course they're going to have their own payment in there, you can load in other brands' payment cards into their wallet. So they're going to support Visa and Amex transactions, cards into their wallet, because they're looking to own the wallet space. With a screen, with a keyboard or other form of interaction, on this one I can choose different things, I can change them, I can load and download over the internet. I have a real multi-application proposition that says as a consumer and as a bank or the service provider talking to me, we can have a dialogue to get what I want on my phone, to get the services that I want, where I want, and through my mobile phone, depending on how good the apps are, in the way I want. So there's definitely opportunities in that space, and there's an awful lot of mobile phones out there for doing things in terms of building on the opportunity just to be able to do mobile payment. In terms of some very boring and standard stuff about managing applications and chips and relationships with card holders and service providers, well, the more you get into multi-application, the more you need a solution that can do all of this relationship management, that can manage a keys life cycle, an application's life cycle, a chip in a phone's life cycle, a companion card that goes with that for those events where you want to pay with something and you can't wave your phone. So there's a lot of stuff there that basically says, how do I talk to other systems, how do I work with other systems to do what we've always done before in terms of trying to manage card holders, manage payment, etc., but now on a bigger scale. And with the mobile world, for those of you who download your own applications, or particularly see the younger generation download them, on a much faster, much more on-demand basis. So if somebody has in their wallet a payment card that doesn't work, it's quite likely they'll delete it and load somebody else's very quickly. So long as the service lets them register to do that, that's going to be a lot more churn in terms of customers than banks are used to, where you've got to go into a bank, go through an application process and wait several days to actually get a physical piece of plastic that you can spend. So long as the credentials and the identity's there, customer loyalty for the banks through a mobile phone is going to be a lot more important, particularly where there are non-banks going to be offering prepaid credit and debit functions on mobile phones. Boku is one example. That you need to think and say, how can I again build on the mobile payment opportunity? What else can I offer the customer in making it easier for them to use my card in your wallet, on your phone, to pay for whatever it is you want? As a device, it's also a very good channel in terms of any form of mobile banking, remittance, etc. And the same security credentials for doing payment can be used for mobile banking. As with any relatively new technology, although it's very rapidly becoming mainstream in some areas, there have been some challenges. A lot of those challenges have been addressed. Some of them were ignored in terms of pilots. Some of them are actually different in terms of regions or particular handsets, etc. But you suddenly get from something where, as a transit operator, as a bank, whoever issued a piece of plastic with a chip in it, because you issued it, you had a supply agreement with one chip provider, maybe two if you wanted to dual source, one or two people to produce and brand the plastic, ship them out to your branches or post them directly to customers. The application you would have certified possibly if it was payment or transit. And your supply chain was very much restrained, constrained and manageable. You now go into, dear Mr. Customer, what kind of mobile device have you got that you want me to put my application on there? Because it's a secure application, I need a chip to put it in. Where is that chip? Is it in the SIM? Is it in the handset, in the case of BlackBerry and some of the Samsung devices? Or, with some of the older phones, is it some form of bridging technology, a micro SD that I can plug in that's actually going to provide me with a secure element to store my application and possibly the NFC capability to do wave and pay payments? There might be different options in terms of who I could get that application for that's been certified with any of those combinations. Even, for payment in particular, who provided the wallet that is your user interface to interact with people? So, again, a customer who says, I want it now, because it's my mobile phone, I'm used to downloading apps from my store, I'm now going to download a credit card onto my phone, will want that your system can immediately pick up, it is a BlackBerry device, it's got an embedded secure element in it, it's got the following capabilities, and I have the following certified applications that could go onto the inside secure piece of silicon that's in there. That's very much, again, getting back to more relationship management, the more multi-function side of things. I've mentioned developing industry standards in this slide. the standards are there in order to be able to do things, but they continue to develop and be enhanced. So it's an ever-changing world. From the payment side, EMV Co. recently released a whole new set of guidelines about how you might certify mobile devices, mobile applications. The rules keep changing, but hopefully for the better. So, I have a mobile device with a person who owns it, one mobile network operator at the moment, but if you take Apple's vision that they can go and buy in a SIM-less phone airtime from any operator, it might be multiple mobile network operators they're connecting to, and a number of applications from different service providers that might want to end up in one or more wallets on the same device. So in terms of building on the payment opportunity, how do I offer those to the customer? How do I manage to get them in? How do I manage the life cycle of those beyond, yes, it's there? So if the retailer says, I no longer do that loyalty scheme, move that out of the phone, how can I do that without interrupting the season ticket that I've got in there, the credit card that's in there, etc.? It's all about life cycle management of multiple elements. Bell ID's token management system has been doing this for years on plastics, for multi-application smart cars, and for the last 4 years we've been doing it in terms of the mobile space with some very large customers who are now doing this around the world. As I said, global platform and a number of other standards allow this to be possible and allow multiple trusted service managers to talk to each other. So if it's a telco or if it's Etisalat as the mobile network operator, if it's SABB or any of the other banks who want to offer the financial, there has to be some relationship that says how can these entities talk to each other so that the end customer can get the mix they want on their phone. Our solution supports that for whether they're the bank, the mobile network operator, or some service provider sat in the middle serving one or more sides of the equation. But it's all about the right mix. It's also about, in terms of building on the opportunity, how I take it to market. There have been an awful lot all around the world of throwaway mobile NFC pilots where somebody's got a phone with a new chip that they stick in for the SIM and an antenna stuck out the back to give them the NFC capability, a bridging technology, that they can go and do 30 or 300 with a couple of readers in a town or city, usually in France. And after a couple of months, this is then proven to be, well, yes, what have we proven? Consumers like it. Great. What do we do now? We go away and buy a completely different system that can do this with real phones, real applications, in millions of customers. So I haven't proven the real technology, I haven't proven the real processes, workflows, use cases. Bell ID's strategy is not to do throwaway pilots. We'll quite happily help people through a stage where they will initially offer a limited service, a friends and family pilot, but of the real solution. Initially it might be limited to 1 or 2 handsets, 1 or 2 secure elements, 1 or 2 applications. But it's built on the idea in an engine that can then be extended for more and more device types, more and more secure elements, more and more applications, more and more connections to other third parties, more TSMs that might facilitate other people's service providers or get you into other networks, more mobile network operators. If you start with one in partnership and then can do a commercial deal to add another one, more application. And it might be, depending on who you are and where you are, you might do a deal initially that says, we like Apple, we'll just do iPhone, iPad first, and then the next week you look at market share and say, oh, well, we better support Android as well. Again, you need something that actually has a production capability to support all of these things rather than a throwaway pilot. So scalability of whatever you're doing to the end game, multi-everything, is a key factor in being able to build on the mobile payments opportunity to deliver something that will give you increased revenues, better service and better loyalty of your customers. So, I said at the start, for those of you who were here at the start, that this would be an interactive session, but instead it's turned into a complete monologue. Are there any questions before I let you go and get your lunch? Thank you very much.